In this video, we will tell you about the 9 best assets that will make you rich. I also made more than $50,000 from these assets last month, and you must try investing in these assets. Many of my friends have also become rich with these assets. Watch this video till the end, or you may miss some crucial points. Now let's start. 1. Real estate for lease. Rental property is one of the most typical assets that may be used to generate revenue. The idea behind this investment is to buy a piece of real estate and then rent it out. You pay your mortgage, property taxes, and maintenance charges using the money you earn from renting out your home. Profit is the next logical step after revenue. Investing in rental properties may provide rich returns, but it's not without its share of labor and effort. As a landlord, you'll have a lot on your plate between tenant screening, property management, and repairs. 2. Stocks that pay dividends. One other common way to generate money is via investing in companies that pay dividends. All equities that provide dividends to their owners, at least in part, are considered dividend stocks. You have 2 options with this money: either put it back into the stock or utilize it to generate passive income. Because they are often provided by long-standing corporations with a track record of reliable profitability, dividend-paying stocks are seen as a low-risk investing option. There is, however, always a degree of risk when investing. Blue-chip companies that have paid dividends consistently in the past should be considered by investors. Ideally, a dividend yield would be between 2 and 6% of the yearly dividend, divided by the stock price and then multiplied by 100. If you want to know more amazing assets to invest in, then do press the subscribe button and also the like button. 3. Bonds. Some assets may provide income in the form of bonds. Governments and businesses alike issue these debt instruments as a means of raising funds. Investors effectively lend the issuer money when they buy bonds, and the issuer in turn pays interest on the loan. Investing in bonds is often seen as a low-risk option since they are typically supported by the issuer's financial stability. Compared to other income-producing assets, such dividend-paying stocks, the interest paid on bonds is often smaller. The safest bond to buy is a government bond, whereas corporate bonds are riskier but have greater yields. Investors might also think about purchasing municipal bonds, which provide both regular income and tax benefits. 4. Savings accounts that have a high rate of return. Regular savings accounts often have a lower interest rate than high-yield savings accounts, which typically have a higher interest rate. This is an excellent solution for those who are looking for a low-risk and low-maintenance method of getting passive income. This is true even if the interest rate is lower than that of dividend stocks or rental properties. 5. Private equity. Although authorized investors are usually the only ones allowed to participate in private equity investments, the significant profits they may provide are worth the increased risk. Companies are often acquired by private equity groups, who then invest in them with the intention of growing and eventually selling them. A private equity fund is a pool of capital from many investors that buys shares in privately held businesses. These funds are structured like limited partnerships. Unlike investments in other types of assets, private equity investments sometimes need a longer investment horizon, and investors may even have to put their money on lock for a few years. 6. A mutual fund SIP. Many people put their money into mutual funds via a systematic investment plan, SIP, which enables them to put away a certain amount on a regular basis, often once a month. The effect of market volatility may be mitigated as a result of investors being able to average out their investment costs over time. Mutual funds are a great choice for investors who want a steady source of income with little risk since they expose their clients to a diverse range of equities and bonds. Potential backers should look at the fund's fees, management, and track record of success before putting their money in. 7. Gold. Gold has a long history of use as a medium of exchange and a store of wealth. Jewelry, coins, and bars are all examples of physical gold, whereas gold ETFs and sovereign gold bonds are examples of paper gold. An investment in gold may help protect one's wealth against inflation and currency volatility. A combination of economic volatility and geopolitical unrest often leads to a spike in the price of gold. Also, when the market is down, gold is a safe haven asset. One option for investors is to purchase an exchange-traded fund (ETF) that follows the price of gold. It is possible for the investor to profit from the increase in gold prices when the economy is unclear. Investing in mutual funds and exchange-traded funds (ETFs) that are backed by gold might fetch a tidy profit. These can bring in some extra cash for you by way of dividends or interest payments to investors. You may get exposure to the gold market via these funds without having gold since they invest in futures or real gold. 8. Individuals lending money to one another. The use of peer-to-peer lending platforms allows investors to make direct connections with borrowers and provide them with financial assistance. There's a possibility that you, the investor, may make a profit from the interest that you earned by lending money. In many cases, the profits made via peer-to-peer lending, also known as P2P lending, are greater than those made through more traditional investment vehicles such as certificates of deposit or savings accounts. 9. Annuities. One kind of investment product is the annuity, which promises a steady flow of income to the buyer for a certain amount of time, usually the whole of their lifetime. Those looking for a steady stream of income in retirement or as an investment might consider an annuity. Each of the many varieties of annuities, fixed, variable, and indexed, includes unique characteristics and potential dangers. The annuity's terms and expenses should be carefully considered by investors before investing. Patience, discipline, and a focus on the long term are necessary for wealth creation. Be patient and watch your investments grow should be a slogan you live by. A technique known as compounding allows you to increase your returns both on the original investment and on any profits you've already received. Investing takes time, years or even decades, to pay off, so it's best not to be distracted by immediate profits and stick to your plan. That's all for today. Now you know all the perfect and most profitable assets of 2024 that will actually make you rich. Press the subscribe button to know more amazing financial tips and secrets tricks to get rich. We will soon upload a video on the best stocks to invest in. Stay tuned. Most of my friends have already invested in these assets and they are making regular profits from these assets. I myself have invested in these assets and I have made over $50,000 in the last month. I already said these before. I also made huge products in the year 2023 from these assets. You need to be practical and knowledgeable to invest in these. Actually, investing is all about patience and study. Sir Warren Buffett started investing in his childhood. That's why he got rich. If you are starting late, no worries, you will get rich if you stay consistent. You may become a millionaire or even billionaire in just 5 years if you invest consistently and seriously. Make sure to do your research before investing. Press the like button below if you loved watching this video. Add a comment below if you are left with any queries. Do share this video with all of your friends and family members for them to learn and invest properly. Thanks for watching this video till here.